Hey guys, it's Sasha. AMD published their results last night, and for some weird reason, the stock is up over 6% in pre-market trading. The reason it's weird is because AMD already published these results 4 weeks ago, warning of a very poor Q3, and their share price did get a beating at the time. Now we have a bit more context, a bit more explanation, and AMD is expecting things to get slightly worse before they get better. So the outlook is still gloomy, but is there a silver lining to this cloud? Well, I am going to break down these numbers for you, share my take, my analysis, and my target share price for AMD. And yes, I have dropped my target share price by a lot. I'm going to explain why. Just remember, I am not your financial advisor, I am just a random guy on YouTube sharing my opinion, so please take it for what it is. I am also an AMD shareholder, which means that my analysis may well be biased. So here are the financial results from AMD. Total revenue was around $5.5 billion. On the one hand, it was 29% up from the same quarter a year ago, which is not too bad. But on the other hand, at the beginning of August, 1 month into Q3, AMD forecasted $6.7 billion in revenue for Q3. So when they announced the preliminary results just 2 months after that, it looked pretty bad because revenues came in a whole $1.2 billion short. I'm going to go through the revenue in a bit more detail in a second, but you can see the gross margin has fallen to 42%. This is almost entirely down to the revenue falling and fixed costs remaining fixed costs on the production supply side. And at the same time, core costs of the business are growing. As AMD is investing back in the business, things like R&D is up 67% year on year, and marketing in general is up 48%. So the revenue is down, costs are up, and the result is an operating loss of $64 million, which is pretty bad for a company that has been highly profitable, was printing money up until last quarter. AMD published a separate quarterly report called Financial Tables, where you can get a bit more details on some of the numbers, and in here you can see the breakdown of the performance by segment. The default accounting way of doing things is to compare these to the same quarter last year, but it really doesn't help you understand what's going on. It doesn't let you see the problem at all, because a year ago, the embedded segment didn't exist. This is the Xilinx acquisition that AMD only made earlier this year, and you don't get to see the full scale of the collapse of the client segment either. So let's get rid of the cumulative year-to-date stuff because nobody cares and overlay the last quarter, Q2, instead of Q3 last year. And now you can see very clearly what happened last quarter. First, let's go over the stuff that didn't move. Embedded, that Xilinx business that AMD bought for $49 billion this year, is printing money. Another $640 million in operating income, $2.5 billion run rate a year, consistent 50% operating margins. This acquisition looks more and more like a genius move from Lisa Su as the economy is tanking and other parts of AMD's business are getting smashed. Gaming has surprisingly stayed relatively flat. According to AMD, this is because the semi-custom segment grew while the graphics bit declined. Graphics is the sale of graphics cards to consumers either directly or through third parties, and as with other expensive discretionary spend, it is falling. The death of crypto is also contributing here, although Nvidia suffered a lot more on that front because Nvidia cards were generally much better suited for crypto mining. The big news here is the semi-custom bit. That's where the growth is coming from, and the chips that AMD makes for the latest Xbox and PlayStation consoles, among others, are within this segment. So for whatever magical reason, that bit hasn't fallen yet. Now going back to the segments, data center continues to grow very strongly. Revenue is up to $1.6 billion. Next quarter, data center is going to be the #1 segment for AMD, I'm pretty certain on that, and it's overtaking gaming. It's interesting because this is exactly what I have had in my models, what I've been forecasting for years now, and I kept saying this is where it's going to go on my channel while enterprise data center revenue was tiny, minuscule in comparison, and here we are, it is finally happening. Operating income for AMD climbed to over $500 million, a very healthy 31% margin. This is where the future of AMD's business lies, no questions about that. The hardware going into cloud computing that is increasingly underpinning absolutely everything tech-related, everything in our lives, and AMD is producing by far the most powerful and most power-efficient processors for that purpose by some distance for cloud computing servers, which is why that part of the business is doing well, and I think will continue doing well. And I think that cloud computing is still in the relatively early stages of growth of where it will eventually end up. Now, AMD sells hardware to all the big three cloud computing providers, Amazon, Google, and Microsoft. And next year, data center is where the revenue growth for AMD should be coming from, while other things may not look so pretty. Now, let's look at the elephant in the room, client revenue, because client revenue collapsed from $2.1 billion last quarter to just $1 billion in Q3. And as a result of collapsing revenue, the operating income has also disappeared completely. The client segment is the sale of processors to consumers. This is both direct sales again and sales through computer manufacturers using AMD processors in their machines. Even year on year, this segment is down 40%, which is absolutely huge. Here is what AMD have to say about this in the report. Client segment revenue was $1 billion, down 40% year over year due to reduced processor shipments resulting from a weak PC market and a significant inventory correction across the PC supply chain. Client processor ASP increased year over year, driven primarily by a richer mix of Ryzen desktop processor sales. So the drop is all down to a significant weakening in the PC market according to AMD, and the revenue fell despite the average selling price on the processors going up at the same time. So that means the number of units sold fell even more than the revenue. And this is really interesting because Intel reported their results, and their drop was nowhere near as severe. Their client computing group fell by 17% year on year, and Intel's Q3 revenue in the segment was actually up $400 million versus Q2. Now, the two segments are not exactly the same, but they're close enough so you can compare. But there are two important things happening here. First, Intel's processors occupy the lower end of the price spectrum on average. So demand for more expensive computers with more expensive processors is drying up, as what AMD is saying. And some of these people may be buying cheaper computers instead, maybe switching over to Intel, why maybe Intel is getting a slightly bigger share, and a lot of cheaper computers are not bought as discretionary spend. More expensive computers might be upgrades for gamers, maybe nice to have, while more basic cheap laptops may be bought to replace a broken one. They can be more of a necessity. However, it is also important to note that Intel launched their brand new 13th generation processors, which have seen a big improvement compared to their efforts in recent years. And this new generation has come in way closer to what AMD is offering. Here is a benchmark table for the best processors money can buy today. Most of these are premium processors like the Threadrippers and the AMD EPYC, which are the server processors we were talking about that AMD sells to cloud computing solution providers. But here is the new flagship for Intel, the 13900K. And its stats are almost identical to the AMD 7950X at a very similar RRP. Then we have the 13700K, which is almost identical to the AMD 7900X. Again, performance and price are very similar, and Intel is actually undercutting AMD on many of these new processors in price. And I'm guessing this launch had a pretty big impact on AMD because at the beginning of August, they published their forecast for Q3, which was somewhat optimistic. Then Intel launched these new processors on the 29th of August, and I'm guessing some people would have held off on buying an AMD processor during August, waiting to see what Intel brings out, and then Intel stole some of the market share. The good news on the technical front is that while performance on these chips is close, AMD are still quite a way ahead on the architecture. Intel just started manufacturing their processors on the 10 nanometer node, while AMD has just upgraded to 5 nanometers. The node size is a rough comparison of how small the transistors are on the chip. So the smaller transistors mean that you can fit more of them on a chip and they consume less power. Now, the way different companies measure these is not actually the same. Intel's 10 nanometer process is more like the 7 nanometer process that TSMC uses, and AMD used TSMC to manufacture their processors. So AMD is on a more advanced trajectory in terms of manufacturing. This enables growth to be better in the coming years. Intel makes all of their chips themselves in-house, while AMD is outsourcing it to TSMC. And outsourcing means that AMD benefits from being ahead on the tech because they always get access to the latest and best from the best manufacturers in the world. But AMD also have two other advantages here. AMD's Zen 4 processors use a chiplet architecture while Intel is still using a single die, and this means that AMD can scale their processor design more quickly and easily. The processors are modular so that if you have for example, a 4-core processor, making an 8-core version is considerably more straightforward for AMD than it would be for, say, Intel, because you're effectively kind of combining the two 4-core options. Now, I am oversimplifying this a lot, but you get the picture. It means that if Intel wanted to go and upgrade their processors in the coming months to release more powerful versions, that would be quite a big undertaking, whereas for AMD, it may be relatively easier to go and make new processors in relatively short timescales that may begin outperforming these newly released ones that we're seeing. Now, AMD have also recently launched their 3D V-Cache, which is the first time that chips are being placed on silicon in a 3D arrangement. Because up to now, chips layered in 2D only. And this is because the sizes of the chips are just so tiny. They're measured in nanometers. It is incredibly difficult to do anything other than just stick them onto a flat surface in the manufacturing process. But the new processors from AMD have started layering them upwards, which is a technology that can yield incredibly powerful results in the long term. This is just the first step. Most importantly, AMD only released their new generation of processors on the 27th of September, 3 days after the end of the Q3, which is what we're looking at right now. So on top of Intel stealing their lunch with their launch in August, there was probably some cannibalization of AMD's products by their own new processors coming out as well, because consumers knew these new CPUs were coming, and many would probably wait a couple of months, especially when money is a bit tighter, for the new, better CPU than by the previous generation. Now, let's look at more of the numbers in the model, because of what we've seen in the market and the developing cost of living crisis, I have gone and absolutely smashed all of my growth rates and all of my assumptions. The one thing I have not slashed as much as others is the data center. I'm expecting growth to continue through next year because this new generation of processors that have just come out that AMD are launching are incredibly good. They consume less power, they offer a lot more performance. I expect a lot of people in data centers around the world to be switching to using these over the coming months. I personally am switching to using these in my businesses. And I'm forecasting less growth than the 100+%, whatever crazy percent we've been seeing recently, but still forecasting reasonably strong growth in this segment. I think this is where AMD is going to be making most of their money. I have forecasted another drop in revenue for the client segment though, down to just $900 million in Q4. I know it's Christmas and Black Friday and the new processors are coming out, but I thought I'd be on the cautious side of things. And then I have the client segment ramp up slowly over 2 years. Not immediately next year. In fact, next year I only have 10% growth year on year, and then 20% in 2024, and then I start decaying the growth rate from there. So maybe some people would say that's a bit too conservative. That's what I've got. Maybe I'm slightly overreading the macro. Anyway, the gaming sector has been surprisingly resilient, which is interesting, and I have baked in a relatively slow 15% rate of growth next year in 2023 before it goes back up to 25% in 2024. And I also went very conservative on the embedded segment. I'm sticking a 4% year-on-year growth rate here, and the 50% margins then decay over time. Maybe they won't, but that's what I've got in the model. And then there's a bunch of other assumptions in here as always. Patreon members at T level and above get access to all of these models. I share everything else in terms of my target prices with everybody. So if you're interested, make sure you go and sign up. The link to my Patreon is in the description, and I'll see you in the Discord if you do that. Then I have a 10% discount rate in the model, 4% long-term growth rate, 18 times EBITDA multiple, and after doing all of that, after updating the debt numbers, the share numbers, and by the way, the share numbers are coming down because AMD is buying back stock, after slashing every assumption in the model, I get a target price of $103 to $125. Now, I think that the EBITDA multiple is pretty reasonable here, not very high at 18, so I'm going to go with a big slash down to $120 on my target price for AMD. This is an unusually high drop for me, but we're seeing a lot of different headwinds here. The risk profile is a bit hotter, and I prefer to go with my best view at any one point rather than just keep the rose-tinted spectacles on and pretend nothing is going on. Pretend that the stocks you're invested in are doing perfectly and everything is rosy. This is still, though, almost 100% upside on the share price today. So I am very happy to keep the stock. We'll be buying if I have some more money at some point. We'll see how the story develops. AMD themselves are forecasting a flat Q4. pretty much the same numbers as they had in Q3, the exact same revenue, but tomorrow they are releasing their new RDNA 3 graphics cards, which should be extremely interesting from an investor perspective because AMD have been getting closer and closer to Nvidia with every release, and Nvidia make a lot of money with their graphics cards. Some of the rumors are saying that this new generation might get right up there really close to what Nvidia is offering, and if it does, while running on a lot less power, that might be a massive long-term upside for the business. We'll have to wait and see what they bring out. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, I really appreciate it, and as always, I'll see you guys later.